Hi, I'm Steve Rhodes with TFNN. In a few minutes, we're going to take a look at the health of the market, the emotions of the market for both the Dow, the NASDAQ Composite, and as well the New York Stock Exchange. We'll look at the McClellan Summation Index. But my first question is, do you believe that decision-making is controlled by your emotions? Have you ever had a fight between your heart and your mind as to what to do? Look, the brain controls a lot of things, but one of those elements is there's an emotional part of the brain. And many people have said, boy, I only wish that I could take my emotion out of trade, and in fact, trade like a robot. But the reality is you absolutely do not want to do that. And the proof is really in the pudding here. Let me give you a couple examples. First, it's the Iowa gambling tax. You can go online, you can look for this. But in summary, what this tax did was it took 4 decks of cards, A, B, C, and D. And it took individuals who had issues with regard to emotions from a brain standpoint. So they had some issues going on with their brain. They didn't feel emotion, versus somebody perhaps like yourself and me that have all these gears turning in our heads. Decision making is emotional. And what they did was they took these two types of individuals, the 4 decks of cards. Now, deck A and B, as an example, had higher payouts, but it also had these cards where there was a significant loss. And you started with $2,000. Once you were bankrupt, you were done. Whereas deck C and D, they were stacked with lower payouts and also lower risk, meaning that if you turned over a bad card, you couldn't lose as much. Now, when they started with the individual, like yourself and myself, you start turning over A, B, C, and D. Once you get stung, what they found is you stay away from that deck. In fact, what happens after, and there were 100 cards that you would turn over. The individuals who had the emotion in there would stick with deck C and D. Whereas the individual, the robot-type person, the person that had the issues with regard to emotional damage inside their brain, they stuck with A and B. They went bankrupt pretty quick. In fact, they asked, could I take out a loan out there? Could I go ahead and wager more? Back in October of this past year, just to show you how emotion impacts trading in the markets here. Forget about that study. How about the use of the word Ebola, which drove up the VIX index? Now, when the VIX index tends to rise, it typically creates uncertainty in the market, and the market begins to sell off. On this chart here, in white, happens to be the use of the word Ebola in stories. And watch how the white line goes ahead, and it really matches what's going on inside the VIX index here. Ebola was certainly an emotional, scary time, especially during the October 2014, when it played such a role in the daily news out there. Now, the psychology of trading, there's proof beyond belief that each of us need emotions in order to make proper decisions. So it's all about staying aligned. In the marketplace, it's all about utilizing the system. It's all about understanding yourself so that you can properly interpret the market. Now, on May 7th and May 14th, I'm going to be doing a workshop, 45 minutes each session, that helps you to understand the psychology of trading. But in order to do that, you have to understand what influences you. And there's 7 human needs that influence you and I: growth, certainty, uncertainty, significance, connection, love, contribution. And all of these, each of us need these things. But each of us have these in a different order. And we have these in a different order. They are going to, we will end up making a different decision. I can't explain all of that here, but I certainly am going to go over that in detail to help you to understand how you can manage yourself better, which is then is going to allow you to manage your trades or anything else that you do in life. This will allow you to have better personal relationships. This will allow you to do so much. You need to understand, I'd like you to understand, your 7 human needs, how they interact with each other. Now, let's go back and check in on the emotions of the market. And there's a number of different tools that we can use to measure the emotions of the market. One of those tools is the McClellan Summation Index and the price oscillator, which in essence is controlling the Summation Index. And when the price oscillator, the bottom panel here, is above 0, this is telling us that buyers are in control of the market. There are times when there's divergent patterns where it gives us an advance warning that there is trouble ahead. As we speak right now, there is no trouble ahead. As long as these price oscillators stay above 0, then the buyers have control. If by the end of today's session at 4 p.m., the buyers have lost control, that'll take on a whole different meaning, a whole different emotional meaning out there. So look, there's 3 ways to get into this webinar. First, it's free to existing subscribers. If you're not a subscriber, you can sign up for my free newsletter service, Mastering Probability. You've got a free 30-day trial. Today's April 24th. The workshop is going to be May 7th and May 14th. Or if you don't want to go ahead and sign up for a newsletter, you can pay $97 for this 2-event course, The Psychology of Trading. This is being held May 7th and 14th. Look, if you can't be there live, it'll be archived on your workshop. You'll have access to me by voice, by email, whatever it is that I can do to help you. So have a great day, a great weekend, and we'll talk to you soon.